Hello, today is the 20th of January. This will be a second and final part within the charts, and there should be another video log as the final video for today. I want to go over some comments and even some other information. First, we'll see if there's any new comments on here. No. Just waiting for the SmackDown. The manipulators are waiting for enough longs to enter, and then pow, price falls, margin calls, bang goes down. She's under 30 again. It's like Groundhog Day. I've relived these moves over and over. And I've replied at some point there will be a final SmackDown before a big explosion. Was December the final one? I don't know because I don't know their plans. That's why the 40 target is the most important, as I have mentioned. Even then, when you have confirmation, they can create a failed move, which they did on the final SmackDown in April. We'll actually take a look at the April charts. Okay, going up almost no volume. Basically, the move is small right now because we have gains of like under 4%, like 3.5, 3.6%, which is larger volatility compared to what we've had, which has been microscopically small. And also, we're not at a bottom level. So when I see the bullish candles going higher for gains, I would expect them to be on breakout levels, which usually has good percentage gains. And on silver, it would probably mean in the areas of 5, 6%. And as far as the bottom, well, that was 26. That was a long time ago. It is certainly interesting times we are living. I appreciate your charts and input. Well, thank you. This is because I was reading this before and I never read this before, and I was kind of off. That's why I might have read it a little bit differently. This is not real. This is short covering rally from the paper traders squeezing other paper traders. It's all been paper traders along the way. And there's people that'll buy physical bullion and maybe are able to get orders on the physical through the COMEX. We've seen Gerald Celente have difficulties, and obviously there were others with him. The price has nothing to do with the fundamentals because it trades on fundamentals, and quite frankly, the fundamentals to me is the long game and long term, that is. And I have a final end game level of divide. You can't divide by zero, basically. Meaning, if you want to keep on tracking silver, you're probably better off to the gold and silver ratio. And until Fibonacci proves me wrong, I will heavily use that as my measure. And now let's go on with the charts. Quick little update as the market has broken past the 3168 level up to 3192. And currently, as of 2:30 p.m. Eastern Time, it is at 3176. So therefore, it's up 2.19% since 12, and the 6 hours before then it was up 2.17%. So therefore, we're looking at 4% gains from the bottom point, but the day started right in here. If you're really interested in the daily moves. The time frames that I use is when the market opens. The market opens at 6 p.m. Eastern Time, which is basically midnight Central European Time, and it closes, with the exception of holidays, at 5:15. Today it'll close at 5 o'clock, and the holidays like the one on Monday closed at 1:30. And when that's the case, which it was this week, what I'll merely do is the last quarter on Monday was from 6 a.m. to 1:30 p.m., or a 3-quarter day, basically. All right, let's now talk about what happened back in the day. And what I want to do is go back to the quarter day chart from right before the first SmackDown in 2011. So it's a historical chart looking back in time. And this is what it looked like. This is movements that occur over a 6-hour period. So we're going back to the start of March. Basically, we had the entire month of April in play. Let's reduce the size of that so it's not quite as bold. We had this uptrend, and basically it kept on creating different resistance fields. Meaning, that's not a good word. The rate of ascent kept on going higher on multiple times. At least as my memory serves me, and just by looking at this chart, it serves me as well. You can see there, well, the lines, so you do that. Ooh, okay, so then you do, it just kept having great rates of ascent. But if you look at the volatility within the mix, you have a period here where it goes from 40 up to 50, which is a gain of 10 or 25%, and it does this in about 3 weeks' time. And then a move on a more shorter term level brought us down to 45. That's a loss of about 10%, and this occurred in just a couple of days. Now at the time frame, we had the Fibonacci from the lows of 36, and these were automated. There were actually better targets to use, but in reality they were even lower than this, and therefore it was holding well above this mark here. So either use a longer term Fibonacci, the longer term Fibonacci saying you're in a major bull market, and until something tells you differently, you want to look at the shorter term time frames and use that within your measure. So what we'll do is we'll even shorten this down again. And this is the shortest one I currently use now, which is a quarter day. But at that time frame, I did use a 60-minute chart. So that's the one that we're going to go to. And the Fibonacci that we're going to use is the one from this high to this low, which is the most obvious ones to go for, because what's a significant high? Well, it's obviously here, and you had a correction through price, which is very common and normal in all markets, bull markets and bear markets. So therefore, what low am I going to use? Am I going to use this one, or am I going to use this one down here? No, this is the most important, so that's the one that I'll use. And let's now go on to that chart. So there we have it. So this is coming off of those lows. Now, when it came up to this level, this was a huge, huge mark, and you can check back at the videos. I'm almost certain that I was talking about 47.77 as a substantial level. And therefore, what happened, it didn't find resistance at this level, but rather it found support. Now, at the time when it's breaking it, just like we're having it today with the same 2/3 retracement mark, you want to see how this level holds, because it could very easily pierce above. So in here, there was no reason yet to say that it was going to continue to go higher, because it got above the significant level. What you wanted to see it do is to hold and stay above it for a significant period of time, or just burst through to the upside. And in reality, two of them happened, because the burst happened in here. The high was 49.81, which would mark us up to about here. So it came very close to that most recent high, but it did manage to get above 49. So for the amount of periods that it moved from here to here, it was quite long. So it held above it for quite some time, but it was getting to the point where I remember watching this, and it's like, when are you finally going to break out? Because all I want to see is like 15, 16 candles or so, 17 candles where it's going to hold above it, which is like right in here. So what's taken? So there's a breakout in here. So at that point, like finally it's about to get going. And the warning signs came in here, and then again it came back to support. Now, one thing that I keep on saying is the more often that you test a specific area that's important, and these are usually important levels, the more likely it is that you take it out. Now, if you would come out and say, okay, I'm going to predict that it's going to smack down to 38, you can say that it's possible, but the first level that I'd be looking for would have been this one here. And anyone who bought in this area, they would have kept on seeing it plummet, because we had moves that occurred basically, I think it was a matter of falling, what was the percentage? It was over 10% in 10 minutes, basically. That's just massive. And if you look at these moves, this is a 60-minute chart. Just this hour alone, that's the biggest hour. Let me get a straight line. As far as the biggest moves were concerned, you have this one, that's 47.15. And it opened here at 45.81. So basically, and below it actually. So we'll even say 75. So basically a $1.30, $1.40, and on 45 that works out to about 3%. So there's a 3% move in 60 minutes. Now, why is this important today and in the days and months coming in the future? Well, it's important because it did it before. And therefore, if you do start to see moves that are gaining 2%, 3% in an hour, then again, this is going to mean that, well, things are picking up, and let's just see how far this thing can go, because overall, from its lowest point of like 45, got up to like 48. So that's a gain of about 3. On 45, that's about 7% or so, and it did it in about 6 hours. So you can end up, so for today's measure, if it's 12, well, let's do, you wake up and it's 6 or 7. And silver right now is at the price of, say, 32. Well, if we go up 7%, and it's now lunchtime, well, 10% is 320, 5% is 160, so we'll just say even 2, we could see a $2 gain to 34 at that quick of a time frame. Now, I'm not saying that's going to happen, nor would I even expect that to be the case as well. But, however, like I said, because we've seen it before, we can set it again. And another thing to note is the bar. When you set a bar, that's the new record. Therefore, you say you're playing a sporting event, you set a bar where you get 20 goals in a season. Now you try to break it, 25, 30, and so on. And in all sports, records have been broken. So now, in 6 hours, can we do anything greater than 7% on future time frames? And the same can be said about the downside. We set the bar for having a 10% move in like 10 minutes. Can we do 20% in 20 minutes on the downside? Again, those are things to be aware of, because I don't want to count out the fact that, let me just go back to the current chart again. I don't want to count out the fact that because we're below that 40 level, that means we're not bullish. In fact, I mentioned 33.5, which is actually major levels on 2 different time frames. If you look at my older videos just recently, you'll see it when I talk about the weekly chart. However, that does mean we're in a bear market. But that doesn't mean that it's going to always go down from this point. Sometimes it will, sometimes it will not. However, a move back down here means that we're in really bad shape. A lot of people are feeling good right now because the silver price is a lot higher, and it's all about how you feel from where you came from. Because we were here on multiple occasions, because we're at levels not seen in about 6 weeks, this makes people feel really good about the market. However, the last time, or the very first time we were at 32, after the big smackdown in April, the price being much higher than it is now, people were feeling really bad about it. They were feeling really depressed because, well, their investment in the silver that they got in their safes, as they see it, is down in value, when in reality the silver they have in the safe had the exact same weight as it did the last time you put silver in it, basically. And so the point is, we're in a bear market, and a breakdown below 26, I've set the target on multiple occasions, and that's the previous resistance from 2010, which is in the ballpark area of 18 to 21. And moving below 26, and we'll use 20 as an even variable, that's 6 on 26. 260 is 10%, therefore it would require a move of greater than 20% to the downside in that period of time. And that's a possible reason why you could see that move of 20 minutes down 20%. And if we lost 20% today, using the same sort of example, well, 320 is 10%, that would be 640, which would basically take us down to this bottom level here and probably down about 25. Again, that's extremely unlikely to happen, and we'll just end the video at that. Thank you for tuning in. Bye-bye.